Welcome to the Money Vikings Podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings Podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
Papa Buffett sits on $150 billion in cash. Wonder what he's waiting for. And perhaps he understands opportunity costs. This and more pumpkin spice shenanigans at the Money Vikings podcast number 58. Bob and Jerry, how are you?
Oh, I'm so pumpkin spice latte.
I'm so done with it. I'm so done with it.
I know. I'm
I love
so
it.
done with it. You're done with pumpkin things, man? It's only November.
Yeah, we're not even through Thanksgiving yet. How can you be done?
Yeah,
just kidding, dude.
Done
It's
with
just
pumpkin
starting.
stuff on November 7th?
I was telling my wife I want cherry pie for Thanksgiving. None of this
What?
pumpkin
Heathen.
pie stuff.
You're a
I can't
heathen.
even believe this guy calls himself a money Viking. This is crazy.
Seriously.
I like cherry too, but
Yeah.
okay. It's because you're a tasty trader. You got to be cherry.
Oh yeah, I didn't even think of
Is
that.
that your thing?
It was subliminal, subconscious. Not
Yeah.
subliminal.
Tasty
Yeah.
trader. All right.
Yeah, the cherries.
Tasty trade's cool.
Everything with the cherry on top.
Love it. I love it. It's good, man.
All right, guys. What? Any announcements? Hey, I really encourage all of our premium members to join our Discord because we are having a great time and
Yeah.
we're really sharing a lot of awesome information. People are making money. People are learning. People are getting inspired by each other. I'm learning.
Yeah, it's cool.
That's the beauty of it. I mean, it's not like we're going here and telling people we know everything. We're all sharing ideas and collectively we're becoming smarter.
Yeah, we're getting our footing. We're getting our footing like that. It's, when stuff like this kind of starts off the bat, like you're trying to mold it and figure out what works. And God, like the past week, just the past like 2 or 3 days of this week, it was phenomenal. It was great, and it's really, the community's really coming together, and we're having a good time. We're making money.
It's nice to see how everyone's helping out too, picking different roles and trying to, we got some whale hunters out there. We got some,
man,
just a lot of different fun stuff going on.
And I like that we're dynamic with the market because, we'll get into the news here and we'll talk about it a lot over this show, but, there's the big infrastructure bill that passed and, I know there's a lot of Dr. Dooms out there and I'm in this weird limbo where, there's this strange dichotomy of there is some good news, right? I mean, the pandemic in America is waning.
Mhm.
The holidays could be robust and the infrastructure bill, but I'm wondering if it's a melt up. Are things going to get too hot? I actually worry about that as much as, where things just get so hot and there's such this rush to, to push stocks up that it goes too fast, too far.
There's always that possibility. Nobody knows. There's no one with the crystal ball, and anybody who says they have that doesn't know what they're talking about.
Right.
Does Kathy Wood know?
Kathy doesn't know. Kathy doesn't know.
Kathy doesn't know. Kathy,
We have to look at it through a few different lenses. Obviously, we've got our technicals, the RSIs and the moving averages and momentum and all that stuff is one lens. Another one is kind of seasonality. And you sort of look at the end of the year. And I was reading, I have to see who we can credit this to. Someone on Twitter said that in October or November, when the stocks move up like they have been, and they're at all-time highs, chances are for the rest of the year they seem to always continue to go up with that Santa Claus rally.
wow.
Statistics and history, and I don't go by that alone, but it's just another data point.
I mean, the only thing, Jerry, that I can tell you for sure that's happening by December is Matrix 4 is coming out.
What? He got it in
yeah.
there. He got it in there.
I know Kung Fu.
Every show this is
But
going to
no,
be in
it makes me nervous that, like, I think you guys read this to me, and I had it in the intro, but Buffett is sitting on a ton of cash. And that kind of makes me nervous too, because to me, and tell me if I'm wrong here, but that just to me signals that he just sees no deals out there. He's like, I don't see any businesses that I can buy. I mean, he likes to buy things at a deep discount, of course,
Right.
but he sees nothing that he can buy at even a discount, right? He's like, everything looks highly valued, so
Right.
I'm just going to sit on my, pile of cash.
Yeah.
So,
And that's a sign, and that is a sign, right? I mean, people need to take consideration. There are opportunities to make money right now, of course, like as this volatility continues, but there's also the things to worry about, that when you have people with a lot of money that aren't seeing deals out there, that is also where you need to be careful, right? We need to remember that there is going to be a time that we need to stop trying to push those limits upwards, and then just stay still and retain the cash.
Let me blow your mind.
Do it.
Here's a little statistic that I actually am having a hard time comprehending, because on one hand, I do believe that assets are very high, okay, and that the stock market is pretty high. But I revisited this book, and I let Jerry borrow it a while ago. It's that one of the books that I really like, called Ordinary People, Extraordinary Wealth by Edelman, that I read about 20 years ago.
And I returned it.
You did.
Yes, he did.
Yeah, which was amazing. That tells you what
as
kind
highlighted on podcast 26.
Oh my God, he knows the number too.
No, that is amazing, actually, because if you have a friend that returns a book,
Yes,
that's
a friend for life. That is a friend for life.
It's amazing. Yeah. Usually when I lend a book out, it's gone. I'm like, yeah, I'll never do that book.
Yeah,
I'm going to buy a new copy.
That's good.
But he returned it. I think it is a great book. It's well, we'll have to go through it sometime. I mean, it's, I don't agree with everything in it, but I like when I don't agree actually with everything I read, right? I want my ideas that I have in my own head to be stress tested.
Yeah, and challenged and discussed, and
right.
I always want to know, like, whenever there's a bull case for a stock, I want to know the bear case as well. I want to know both sides.
That is like such a key, I think, to becoming a good investor. But this book said at the time, it said if the Dow just went up, so at the time of this recording, the Dow is at 36,300, let's say, okay? He said 20 years ago, if it only went up around 7% compounded annually, he said it would be Dow 44,000. And so my point is 7% is what 7% is what I classically grew up hearing in terms of returns on equities. It's like, oh yeah, you're gonna pretty much, if you throw it in an index, you're going to get 7% return. So, I see stuff like, I look at things like that, and then I listen to Kathy Wood, who you guys know I listen to, and then I doubt myself, and I think, well, maybe it isn't as bad as I think. Maybe it isn't as high as I think, but I don't know. You can get a billionaire that agrees with you or disagrees with you. You can get a billionaire that hates Bitcoin, loves Bitcoin. You get a billionaire that says it's too high. You can get one that says everything's fine. We have to navigate it, guys. That's the bottom line, right?
Right.
We have to navigate it.
Yeah.
What else?
What percentage do you think, like 150 billion in cash for Papa B? That's a lot of money, and that's it's a lot. But what percentage of his entire portfolio is that? Is that?
Oh yeah, like to him, that's like $1,000.
Maybe.
It's like
maybe.
I think he's got that like in his
2%.
wallet, right?
I mean, if it's like the traditional 70-30, is that part of the 30% of the bond weighting, and the 70% is still equities, and he was over allocated equities to 90%, and he thought he'd scale back? Because that means a lot more to me than just saying he has 150 in cash. That's a lot.
Well, I think you're right. We should look at what's the market cap of Burke, because I think that, right? Wouldn't you compare that 150 billion to the okay, here it is. The current market cap, actually it's actually quite a bit of money, because what I can see here, as of November 2021, Berkshire had a market cap of about 650 billion.
Okay.
So 150 billion is a considerable amount.
It
right?
is. It is. Yeah.
Because I know what you mean, because we get
25%.
Okay. So that's actually a lot of money. I mean, because you're right, we get into this era where, it's like, we call it the Dr. Evil era, where you're like, why would you want billions, when you could do quadrillions? Like I have a quadrillion Shina Ibu.
But this right here, though, kind of is a little different than the mentality that we've always had, where it's like, granted, it's depending on the mood of the market, right? When there's uneasiness in the market, I typically like to have 50% cash on hand, like buying power, where
you do that.
Yeah. And so if it's more bullish, if it's a more bullish market and like there's not so much worry about downturn, then maybe 25%, maybe 15% cash on hand and a little more in the market. But where it looks like with Buffett, there's no deals, you're going to need to wait for a downturn, and he's only sitting on about 25% cash on hand. So, I mean, what does that say, right?
I've never, and now I'm, and it makes me question my strategies, right? I'm thinking, should I have more cash? But then part of me is like, well, then you're going to miss out on market gains. You're going to miss out on dividend reinvestments. You're going to miss out on compounding. So I don't know the answer. And I've been able to get away with that. And a lot of us have, because I mean, if you look at the Dow Jones over the last 10 years, all it's done is, I know there was the blip with the pandemic, but if you look out over a 10-year span, it's been a nice big mountain that climbed up.
Right.
You know
what? I actually, I just thought about this. The reason why I typically, I'm reflecting. Here's a reflection moment. The reason why I typically,
reflect with us.
Right? The reason why I do 50% cash on hand is because I tend to do more of the options trading, which is riskier because I have 100% loss potential. Whereas if you're like Buffett, you're doing stocks, you're buying stocks, and those only have the potential to go to zero if something goes bankrupt or bought out.
You're onto something, Bob. Actually, you gave me deep thoughts now.
Yes.
And I think you're onto something. That's why my strategy has not had a lot of cash, because you guys know this. I'm constantly seeking out quality, and so my calculus here is that if I'm really trying to continually add quality, yes, there's going to be some losers at some times, right? But even if the market goes to crap, and whatever happens, I'm thinking I'm invested in things that are of such high quality that they're going to weather the storm somehow. Now, I might need to wait, and I might need to look at paper losses. I need to get through that psychologically. I mean, it's, the account, is down, and I got to look at a different number.
Right.
But again, as we've always said, as long as you're not ever selling the whole thing at one time, it doesn't really matter what the bottom line number is. Yeah, it's great to know what your net worth is and that it's growing. But even if it fluctuates a little bit up and down, over the long run, if you're growing, you are then, again, you're trying to derive income from this basket of assets in the future. That's the whole point of this.
Right. Absolutely.
Anyway, that's the point for me. I mean, that's where I'm trying to go.
Yeah, it's just with cash. I mean, it's kind of an interesting statement. He's saying that he would rather just lose 3 to 5% per year in inflation on that money than even put it. I mean, when we read cash in the news about Papa B, is it really cash, or is he putting it in tips? Or
it might be tips.
Okay.
I've read both. And I'm sorry, I don't.
That would be smarter. That would be smarter for him to do that.
We may want to explain what tips are.
Yeah, I think we did. Treasury, inflation protected securities.
There you go.
Yeah, so they're supposed to rise in tandem with inflation, so you don't lose out.
There you go.
Yeah, I think he does. But your point is still very valid. Because
I have an emergency. Sorry, I just want to say I have an emergency fund. I haven't contributed to it in a few years, and now I'm thinking, maybe I should. It's gone down. I mean, it's not the same amount that it was. It is, but it isn't because of inflation.
Yeah. So, I mean, none of us can really do good at, few people do very well at market timing. I mean, that is just really hard to do. We don't know what's going to happen next week, but my point is this. I'm just looking, I'm trying to take the macro view right now. And I can tell you, my sense and reading of things is that, at least in America, this pandemic is becoming a thing of the past every day, slowly and slowly. It's been very slow. It hasn't been a dramatic kind of rip off the mask thing. But slowly every day, I'm just looking around and I'm just seeing people are kind of living their lives more and more normally.
Yeah, I don't know. I am not as optimistic. I'm thinking
Really?
I'm gonna coin the term called the great refloppening, because
The refloppening.
yeah, because we're gonna reopen, everyone's gonna take their masks off,
Flop
it's
us.
gonna be a party, and then everything's gonna go down again. It's like goldfish, and we're not gonna learn. But I hope I'm proved wrong. I hope I'm wrong.
I'm okay. Hey, you know what? I mean, you're on to something, because that has happened before, and so you're right.
Several times.
And there tends to be this sort of like, oh, it's all over, and let's get
Let's go
euphoric.
travel. Yeah.
Yeah, I'm kind of thinking, and again, okay, I'm not a scientist, everybody, okay, just like, but I'm kind of thinking that on this round, my optimism comes from we are reaching some level of herd immunity. So many people have been vaccinated in the US. Now kids are getting vaccinated. Everybody kind of knows, everybody who wanted to go out and get COVID has gone out and gotten it. They were like, let's rock this out. And those of us who didn't, did different things. So I don't know. Anyway, well, I mean, I hope it's over just for
I hope so too.
humanity.
I hope so too.
Or at least coming to an end. But the other thing is, I can, maybe you'd agree with this, Jerry. I think that this Christmas, I know I'm really feeling it. I'm having a huge craving for normalcy for the holidays. I guess last year I found me such a bummer, and it was like, okay, got through that. Then we started a whole new year. Now we're trying to go through all this crap. Then the Delta Blues came. But now I'm feeling like, no, here's the deal. I was at so you guys know I used to invest in Simon Property Group, one of my favorite REITs.
Oh, don't talk to me about it. That's another story.
I know because we started buying that when it was so low. That was probably my greatest. I pat myself on the back. I'm such a great guy.
Simon Property is the one. The only thing I'll say about Simon Property, and then I'll shut up, is covered calls sucked for me on Simon Properties, because I did not expect it to go up $20 a share in the last couple weeks. So I'm making money, but I'm profit limited at the share price I sold the strike price I sold the call at. But
okay,
shut up
I'm
now.
Sorry about that. I don't want you to have a hard time with it. but I started collecting that at the bottom of the pandemic, when the whole mall was dead thing was the big. Everybody on TV was the mall was dead.
Are you doing an I told you so?
He's doing a knee.
No, it's just being strategic. I don't know.
Oh, okay.
Well, hey, listen, I didn't retire off of it, so I didn't do that well, but I did make money. But the bottom line is, I was at one of these malls the other day, and I got to tell you something. Number one, they're super nice. Okay, like it's a really nice place to be. It's beautiful. The shops are beautiful. The food is good.
How much is a cup of coffee there?
Oh man, $6.
Oh wow.
Yeah, expensive as hell, right?
Treat yourself.
You got to prop price up somehow, buddy. But anyway, this is a well-run company, and I was at this mall, and I started to get, and I'm not even a big shopper, so you guys got to understand this. Like, I'm not even into this kind of stuff. But I started getting this like nostalgia for old Christmases, where it's like you did have the mall thing. You'd rush to the mall. Jerry, I remember one Christmas I saw you rush to this mall. I don't even think you remember this. I don't even think you know this. I saw you go into this mall days before Christmas, like 7 or 8 years ago.
Wait. Are you throwing him under the bus right now? Is he going to get in trouble?
Dude, this is ancient history.
I remember that Christmas, Jerry.
My girlfriend does.
Yeah, right.
Our wives know each other. Yeah. But anyway, the bottom line is, guys, I was getting some. Here's my point. I have a feeling that this Christmas could be a barn burner. And my point is that people want to have a happy, fun time. We've gone through almost 2 years of you know what. And I think people are done. And I'm not saying the virus is done, but I can tell you that human beings want to shop. They want to enjoy life. They want to enjoy family. They want to enjoy great food, and they want to have a laugh. And I'm telling you, I just think, and those things cost money. We spend money to do all that stuff. Yeah. So I don't know. That's why I'm worried about a melt up. That and the infrastructure bill, this economy could be on fire.
Well, if
I
you
could be
believe
wrong.
that, buy some XRT, like right after you listen to this show or right now.
Which one's
That's the
XRT?
Spider Retail ETF.
Oh, yeah. Right.
Just
I'm
saying.
ready.
That's the trade. That's why we're here, right?
Yeah, I'm on it, dude.
I love it.
I love it. Spider Retail. Yeah. I mean, so the only thing that's gonna hold it back are the there's the supply chain disruptions. Okay. But if that gets funneled or fluid enough, I don't know, guys. I think people are going to want to be at the mall with the hot cocoa and the big Christmas tree, spending money, laughing, smiling, and feeling good instead of being like, oh my God, pandemic, and
Yeah.
we have to wear masks everywhere. I think people are just tired of it. Okay, I'll stop there.
It's I agree. So I agree with you to an extent is that people, I think we've had enough of this, and we are in, we're in more modern times. We're way back in days of like Spanish flu, or those times where things lasted for years and years and years. Very different time, and I think the doom and gloom fear really stuck to people, where nowadays that fear tactic causes people to like rise up and go against the man, like go against the us, right?
Back then, Bob, most people were used to life sucking.
Right?
A lot of people today are actually have pretty good lives.
Yeah,
not perfect. There's no such thing as perfect. No one has a perfect life, but I mean, no, I'm joking, but I hear what you're saying.
Yeah, it's like it's a very different time, obviously, but I think people are itching to get out and spend money, ironically, and even if they don't have the money, they still want to do something because they're for a long period of time spending the money was associated with happiness, right? And that's a whole other level of psychology, but it's a reality. And I think that's what people want to go back to.
I think people want nice things and they want to laugh and smile. And I mean, you can do that without stuff and without shopping. I mean, I'm not saying that. I'm not being consumeristic here, but we are consumers. I mean, people are consumers. I mean, that's just a reality of the system we're in. The other thing, guys, we should talk about, I mean, I'm not an economist here, but the infrastructure bill too, I just think has a lot of potential. First of all, it's a force multiplier. And what I mean by that is it's not just spending. We're not just, we've done a lot of like spending money in like other countries on like weird things, but like we're talking about spending the money in our own country. These are American jobs. This is American steel. This is American cement. This is so
Marca.
This also all this stuff, what it does is it actually improves efficiencies. I mean, when you get 5G going, think about that on a massive scale.
Yeah.
You've saved billions of dollars in time and costs and money. When you get roads repaired, people are spending less money on their broken cars or their broken tires, and I'm just giving a very elementary examples here, but these things are force multipliers, right? They continue to feed back and make our system better. When airports are designed properly and built out properly, it gets flights moving quicker and people saving time and energy and into their flights better. You guys know what I'm saying?
Mm-hmm.
Yeah. So I just, all that stuff is going to feed on each other. I just hope we don't overheat is what it is, because, things are running hot in terms of the market. I know that's not always the real economy, but that's a lot of stimulus, and then you're going to have people again sipping the hot cocoa and going crazy with the shopping. Hey, I could be wrong. I don't know. Maybe I'm just maybe it's like after 2 years of kind of feeling a little doomy about the world. It's like maybe it's like a shift in the mind where you're like, I don't want to feel that way anymore. Let's I don't know. I'm not a prophet. We'll just see what happens, but.
Yeah, no, I mean, I'm totally willing to look into PAVE next week and see how it's done well. It's just kind of like bottom left to upper right if you look at the chart for the last year. So
I think the infrastructure bill will definitely change any sort of maybe bearish trend that we were seeing on some of these. I honestly think that
Certainly next week.
yeah, because I don't think it's I don't think it's necessarily fully priced in. I think it was I think the infrastructure stuff was partially priced in when there was a lot of good news around it, like leaning towards things were going to pass. But I don't think it had full buy-in, so I don't think it was fully priced in. So now that we're seeing it, right now that we're seeing that it's passed, we will start to see the full pricing in over a period of time here. So I'm gonna keep an eye on it because I think next week's going to be
next week in our Discord is going to be so exciting. So join Money Vikings Premium, and you can join the Discord and talk with us all week long. It's, do we have a code anymore for?
We have a TMVLISTEN is the code for 30% off your first month right now.
Yeah,
there you go. TMVLISTEN. Join us next week. Just sign up today. Sign up today
and start trading.
Since you brought it up, I mean, what I'm looking at for PAVE, not to give away any secrets, but I'm looking at either a covered call in PAVE. So you buy 100 shares, then you sell a call against it out to December. And then just to make it a little bit less risky, I'll use the premium from the call to buy a put right below the strike price, or right below the entry price, maybe a strike or two below it. And that'll ensure me from it going the wrong way, but I'll also capture the profits going up. I'll be profit limited, but make
a
few $100, something like that. Might teach our members about collars and how to implement those.
That's what people are going to get in the Discord.
Yeah.
What's that?
People are going to get that and more.
You will get that and more. That's just a taste.
That's just it. Jerry, I do need to spend more time with you on that stuff because
you guys should be friends.
Yeah, right. Yeah, right. Hey, my name's Bob. Nice meeting you. No, but like the thing that gets me, like, because my rational mind is thinking to myself, I buy a call option for when the price goes up, it's going to make me money. Yes. But you're selling a call option, and I'm thinking to myself, like, well, the infrastructure bill passed, PAVE should start seeing upwards trend.
Yeah.
Like my fear would be like, okay, I sold that, it passes it. Okay, I get it. You then have to sell your shares for that better price of it.
Better profit. Yeah.
Right. Or if it gets close, you're going to be well, no, never mind. Now it makes sense. I like thinking about
the only time it doesn't make sense
is
with something like SPG, because I don't expect PAVE to go to the moon. If I did, then I wouldn't sell a call against it. And I didn't expect SPG to go to the moon, and it kind of has. And so I'm in a call now where I have to, if I were to get out of it, I'd have to spend a couple grand to buy out of it.
I'm sorry I brought that up.
No. It's all. I'm not losing money. I'm just saying that I don't capture the profits from 135 up to wherever it is, 155 right now. Okay, I capture the profits from 129 to 135. It's still profit.
So
but
this is a great segue into opportunity costs.
Opportunity costs.
How to manage them, because you had to give up something to get that.
Yeah.
When I bought my $6 coffee at the Simon Property Group place there and supported the stock price, I had to give.
Thanks a lot, Greg.
Wait, did you or did you support like Starbucks? Like, let's wait this out.
It was an independent coffee.
It doesn't really matter.
Yeah,
he made SPG go up, and
all I can tell you is they pay rent to SPG.
I'm mad at Greg for that.
Yeah, they pay rent for that space.
That coffee did the whole thing of $20.
Yeah. Greg, you're making Jerry as bitter as the coffee you drank, dude. Don't do it.
Well, he's being more of an old school, like classic personal finance guru, where I'm like, because Susie Orman says never buy a cup of coffee. I'm totally going against you're peeing down the drain $1 million. It's what you'll hear all the time. So anyway, listen, we've talked about this on the past shows. Like, just find balance, everybody. I mean, if you buy one cup of coffee every couple of weeks out in town, you're not going to totally destroy your ability to build wealth.
Sure.
Okay.
Sure.
Get a side hustle. That'll pay for coffee.
There you go.
Yes, exactly. What is an opportunity cost? Let's start with that. Okay. Basically, it's what a person sacrifices when they choose one option or another over another. Okay. We're not omnipresent gods that can do every single thing in the world. We have to make limited human choices. We have so much time. attention, capital, etc. Our
Right.
capital can only be in so many places at once. You have options, you can leverage your capital. But anyway, you have to consider the value of opportunity costs, and how they guide individuals and organizations to more profitable decision making. That's what we're trying to drive at here. How do you make good choices so you're becoming more profitable?
Right.
Yeah. So
there's so many ways. I mean, opportunity cost is such an amazing concept. You can use it in project management, like which projects to invest in that are going to have the highest return on investment. Maybe investing in project A will grant you, 6% return, whereas project B might be 10% return. So you obviously want to do that project B if your predictions are correct.
I'll add to that too, Jerry, that opportunity costs are not just about dollars and cents. In investing, they probably typically are, but sometimes it's about your time and aligning with your higher priorities. When you have when you raise a family and you have children, you've decided to have a certain allocation of your time, right, that you would not have if you weren't raising children.
Yes.
Then you've aligned with your higher priorities. So that's a big part of it too. But when your capital, another big thing I want to get, talk with you guys about is, the idea of debt that people are in. And we're coming up on holidays here. When people are servicing huge amounts of debt, they really need to take into consideration the opportunity costs that are being lost, right? If you're paying $1,000 a month in school loans and $1,000 a month in credit cards, and you got a $4,000 or $5,000 rent or mortgage bill, and then you've got this and that, and you put the vacation on a credit card, you've tied up so much capital in a bunch of things that are just depreciating. Now, maybe not the education. There's an argument to be made.
No,
there.
you're absolutely right. I mean, when you have all that money that is tied up in these things, you're not able to invest it even at a risk-free rate for a very low return. But you're not even capturing that because the money is tied up elsewhere. And a lot of people don't have that choice, unfortunately. But it is definitely something to think about. And didn't Warren Buffett have some statement where even a small candy bar or a piece of clothing or a suit or something, you buy that, but over 30 years that costs you $1 million. If you have some assumptions about the money compounding right.
I mean, that's the typical one they do. I mean, we should use the coffee analogy because it actually is a good one. I mean, some people, as we know, they go to Starbucks or their favorite coffee place every day and buy that $6, $7, $8 cup of coffee.
Right.
And you're right. I mean, that actually over time is a huge opportunity cost. And if you can derive as much pleasure out of making that cup at home half the time, you've probably added another 150,000 to your retirement account.
The other things that people need to think about is that when they are, if you're out in the workforce and you're out working, buying lunches, times that you go to vending machines, they talk about the cups of coffee. Like what are these things that you seem being so little and insignificant that if you really did take a step back and put down on paper how many times you're frequently, doing this, and are you putting it on a credit card because the money in your bank account, but you want to do it? So it's things like that, putting the list out there and saying like, wow, I could save myself, $20, $30 a week just by bringing my lunch, $20, $30 a week just by making coffee at home. That adds up. But I think, further, something to think about when we're actually talking about in the stock market, and I had this conversation with somebody just this past week where they were invested in a stock that was plummeting, and it's going to be a long time for that to start making some sort of recovery back up to some significant level, but they want to be an active kind of trader and with options and even shares, day trading and swing trades. And I was saying to myself that
how long are you going to wait? How long are you going to wait for that?
Right. You're now have all this money, and it was quite a bit of money, tens of thousands of dollars. This money has the potential to go into other things right now that can actually compound and make you a lot of money over time. faster than you
versus
waiting
spending the next
for
10 years
The-
trying to break even.
right.
The desire to be right may
Yeah.
outweigh the desire to make money.
True. I love that.
Mind
Quote
blown.
it. Quote it.
I'm writing it down.
Dude,
The
that's-
desire.
Yeah.
Say it again, Jerry.
The desire to
Damn.
be right is higher than the desire to make money.
Can we
Or
put that? That needs to go on a tombstone. Like, I want that. That needs to be-
really nice.
That's gonna be. Can I? Can I
Well,
steal that and
that's
put
a
that
little
on my
morbid, Bob.
tombstone?
I mean, we're not talking about anything dying.
Oh no! I would say when I pass away, I would like,
Well,
this is like,
I
I'm
mean,
talking about 100
Bob,
years from now.
you got a little-
I want that to be on my
Hey,
tombstone.
I have a little middle ground for you. Could we maybe pop it in our newsletter first?
Okay.
Okay.
think
Does
about
it have to go straight
I'll
on?
meet,
my-
I'll meet halfway. I'll meet you halfway there. Go. Yeah, that's fine.
yeah, no, it's definitely a tough one, and I struggle with that myself too. I mean, I sort of pride myself a little bit. For me, it's like a little bit of a game, and I'm trying to use calls to chip away at my
Yeah.
cost basis. So I have some stocks that clearly have been losers, but I've been selling calls against them when I can, and slowly kind of getting back to break even, kind of using them as tools to do that. But
Right.
generally, and I have enough capital that if I wanted to make another investment, it's not like having it tied up in that particular stock or investment is preventing me from doing other things I want to do. I'm
Right.
comfortable with my allocation of cash to equities and what I have right now. So, but
That's a really good example.
yeah, but definitely it's something to consider and something to think about, because yes, that money that's just sitting in a broken stock that's not making anybody any dividends or interest or appreciating could be repurposed elsewhere, and you
Yeah.
get tax advantages off it too if you sell at a loss.
Mhm.
This is true.
Right.
You've got the lost harvesting where you can get a tax deduction for that, for the
Mhm.
loss.
Mhm.
So that's very true.
And we're getting to the time of year where that's becoming more and more important. Maybe we'll talk
Yeah.
about that on a future podcast.
Yeah.
Yeah, that's good
I like
stuff. I'm with you guys. Yeah, if I'm in a loser, like, and I don't see a way, forward in a, I mean, some things worth holding on to, right? Got it. But some stuff, cut it and move on.
Yeah.
Mm-hmm.
Yeah.
So for me, the other thing I think about when I think about opportunity costs is this is maybe less about investing, but more of a life exercise and more about building wealth. I think a person really needs to know what their highest priorities are in terms of physical things. Okay.
Mhm.
Because none of us, unless you're some sports star or you're Jeff Bezos, you really can't have it all. Okay.
Yeah.
Bezos gets it all in the rocket ship. Okay. The rest of us, okay, he gets to throw ping pong balls with his brother, and anyway.
Yeah.
The rest of us, though, that live on planet Earth and are probably going to stay here, we have to make choices, okay? And I'm thinking about these all the time as I'm living, our life and sort of building wealth. I'll give you examples. There's a certain car I might like, right? Or a bunch of house projects I want to do, or there's some clothes that I might want. But I really have to think, what out of those things, because I'm not going to get them all. What is the top thing at the moment? And that's how I try to approach it, is one thing at a time where I can afford it. But some people have this urge to it's like, remodel the kitchen, buy the new car, load up the credit card with the clothes, go on the trip.
It's funny when I get a bonus or some cash dumped on me, I get excited about where can I invest this? Where can I get the most dividends? Where can, what stock is gonna, go up over the next few years? I get that pleasure that someone gets from remodeling their kitchen or something.
I will say, you reminded me of something. One of the members I think it was Thursday or Friday. He's like, it's so weird. Now when I have a little extra money, I'm so excited to put it in the stock market and do the trading and investing. But like I need to buy some new clothes and new shirts and stuff like that. I'm not excited to do it. I'm like,
well, here's the deal.
It's a balance.
It's opportunity cost, because they're saving. So they are trading today's consumption for more consumption tomorrow.
the potential,
So
right?
yeah, potential. Yeah, I mean, now if there's
No guarantees. Yeah.
Right.
Yeah, if it's prudent investing. But anyway, I just think that's something we have to balance on our path to building wealth. You've got to think about it. And yeah, I guess if you get in that, I mean, first, you build your habits, then your habits build you. That's the old saying.
Right.
And if you get into that habit of wanting to invest first, I mean, wow, that sounds pretty powerful to me. That person is probably going to do pretty well. So
no, that's good. I'm enjoying it. It's
So that's the thing. I mean, we just now the other thing I want to mention. Maybe Jerry, you can chime in here. There's a lot of strategies that you use where I think you get the best of both worlds with your options trades, right? Because you're finding ways to leverage limited capital.
Yes.
And so, right, instead of just going out and buying a bunch of Tesla shares or Amazon shares, which are super expensive, and tying up all that opportunity cost,
right.
You're doing things to kind of have the best of both worlds, right?
There's synthetics where you don't have maybe the capital, or you don't want to use all of the capital to simulate buying 300 shares of a stock. And you can simulate that by buying calls or setting up different strategies to do that in the same type of way you would, and it would cost you only a tenth of the price.
Yeah. I mean, right there, that seems, if someone can, like you, can master that, I mean, that seems like a way that you're really leveraging. And you can remodel your kitchen in synthetic place.
Yeah, even like
you do have a nice kitchen though. I don't really think you need to remodel.
Yeah, covered calls are a pretty capital intensive option strategy, and that's why they're so conservative, because you're basically using the capital and you're selling a call against it for a little bit of a discount on the stock. But what's really interesting are poor man's covered calls. And that you're spending money buying a way farther in time, deep in the money call, rather than 100 shares of the stock. And you're kind of simulating buying 100 shares of the stock. So we'll get into that later with premium members. After we get comfortable with covered calls, we'll start doing synthetic covered calls.
Poor man's covered calls, PMCC.
PMCC.
See, yeah, you know me. Remember that?
Yeah, I'm down.
Actually, it wasn't a real song, but it's pretty good on a show. Okay, so hey, what do we got cooking for next week, guys? Let's get into it.
Yeah, so for me, the market is at all-time highs. I made some bets several weeks ago that we would not be this high. We're like with the Russell 2000, I did an Iron Condor. I did one with the members, but then as soon as I closed that one, that was profitable, I opened up another one. One standard deviation out, and we are past that. The Russell has just been gangbusters this last week. Broke out of a consolidation that's been going on for about 9 months, and you talk about just energy sort of just waiting to break out, and that's what happened. So I wouldn't mind a small pullback in IWM and many of the other indices that we're in, but I may not get that, so we'll see. That's in my short-term trading portfolio. Bob and I have been kind of throwing around some Netflix ideas that I don't know if you want to talk about that one, Bob. And then
I'm okay. We talk about it. It's I'm just looking at the trend of Netflix and figuring out where the potential strategy is, because I see that there is still some room for some more downtrend. So what is a way to leverage it to kind of mitigate cost and get in on a play where there's more downtrend, and then in the next couple of weeks we should start seeing a new uptrend.
Cool.
And that's kind of what we're looking at. I'm also, gold. I think we have some plays going on with in our bonfire. We see some writing on the wall and some things that look like to play out with gold. That is going to turn around some great profit in the next few days.
Nice.
Yeah. What do you got going, Jerry? With you were mentioning the Spider Retail Index. That is really intriguing me. Williams Sonoma, Target.
I was reading Investors Business Daily, and they had a bunch of stocks. If you just want to do the retail ETF, there's XRT. XRT is the Spider version. Williams Sonoma looks interesting. Target, Walmart, Academy Sports and Outdoors, Dick's Sporting Goods, all of those look pretty interesting. So I'm going to be checking those out next week. I mean, they're on my watch list, but we'll be looking for them entering the breakout areas or the buy zones. Roblox has earnings tomorrow, and so does PayPal. So I'm looking at maybe a Roblox Strangle and maybe a PayPal Iron Condor, both kind of neutral strategies. And then Apple seems to have a like forming a cup and handle base, a cup and handle with the handle right now. The base is just formed, so maybe might do a short-term long Apple play. We'll see what happens there. I'll have to hit you, Bob, up on that for that one.
I walked by that Apple store when I was on that Simon property. Woo, it was packed.
Nice.
Oh yeah. Hey, you know what? I completely forgot. We didn't even talk about these massive plays that we had this past week with Penn and Zillow.
Go for it. Go for it.
Yeah. So this was something. This was a crazy because one of them we've had a few actually really good plays this past week, but the ones that really standing out are Zillow and Penn. Then we had another one of the members with NVIDIA. So real quick on Zillow, one of the members said, "Hey, they missed their earnings like huge."
Mm-hmm.
And and then there was this stuff going on with them shutting down their division that was buying and selling the houses, and they were flooding those houses back into the market. So actually, I'm sorry, this was even before the earnings call. He was saying like there's this article out, and you know where he's at, the market's just getting flooded with these houses. He's like, I'm going to buy puts on Zillow.
Yeah.
And so we're like, okay, so you know. It's uncertain. This is that gamble, but it made sense. And so
you take a calculated risk defined play.
Yeah. And that's
people are
it.
just sharing. People are sharing what they're doing with their decision in terms of how much capital they want to put at risk.
Yeah.
And
so
that's the way it goes.
I jumped in and I bought a handful of put options that were expiring on the 19th. And then
this was talked about in our Discord.
And this was prior to earnings.
And so, sure enough, I got in on those for the 19th and for about $15 per contract. Then the next day they were up to 24. So I sold them. We're good. Well, he was still in on these things and earnings went south really bad. And it was just continuing to move. And so I'm like, okay, downwards. Yeah. And so I bought a bunch of puts that were, kind of deeper in the money. Very short dated. And I bought a bunch more. And it started going up even more. And so I think we did, I think it was about 100, 200, a couple 100% on that play, right?
Wow.
And that was it going down. Then, coming up like the next day was Penn. There was Penn Gaming. They missed their earnings by like 40%, and they started diving. And then there was other new stuff tied. There was things going on tied to it that caused that one to drop. And so, again, just being safe, only jumped in with a couple options on that one. So, my two options at the time that I initially started with, I came in, I think they were, what were they? $6 a piece, right? And I only had two of them. I sold those. Where are they? I sold those $6 puts for $80.
Nice.
And the funny thing about those is that was actually when the price of Penn started going back up. I sat on them overnight.
Oh, wow.
It went back up. And so I actually lost a little more on that. At one point, I was up 6,300%. 6,300%
Holy
on those options. I sold them at the time when I was only up about a little over 1,000, like 1,200%, right? So as this was going down, I actually took a larger position in some options. I had bought them for, what was it, $15 per contract. I actually added a little more to that position, $15. I turned around and sold those for $75 per contract in the same day, the larger position.
Love it.
So one of our members, the one that called this out, he he had to go to work. He was leaving for work, and he sold all of his at the time up 5,300% from his call up. So this is the type of stuff that we're doing, and it's just blowing my mind, like, to think how life-changing that is if you're in the right position on it. You know? With minimizing the risk.
Work.
Yeah. So those are some of the call outs. We had another one of the members with NVIDIA. I think he did a vertical spread, which is a really cool, a little more technical strategy where he bought I think he sold a call out of the money and then bought a call a little less out of the money. And so as it passed his one call that was, slightly out of the money, and it passed that mark, but it hadn't hit the further out of the money call. He was ripping in profit, and he wound up buying the one a little further out of the money back and closing it out to then ride the continued momentum of his other call, which was started to become deeper in the money. And that, I think he made, I want to say he made a few thousand% on that one as well.
TMVLISTEN, guys. Join TMVLISTEN.
I mean, this is happening. This is real stuff that's happening, and it's
good stuff. Yeah,
exciting. So,
well, guys, let's rejoin on Discord when the market opens.
Yep.
And thanks all for listening. Any parting thoughts? I think we're headed into a very interesting time, and hopefully everyone's going to make a lot of money, and we're going to get past this pandemic and have a nice holiday.
Yeah, build up your watch lists. Keep an eye on things tomorrow and this week.
And my little bit is something that I've been sharing with the members that I want people to always remember, is that when you're trading in the market and you're trying to do it wisely, always try to find the predictable, repeatable patterns and stay true to those. And don't ever get outside of your comfort zone. Be patient and kind of let those opportunities unfold into the pattern that you're looking for, and you can predict because it repeats.
Right.
So,
and we use capital amounts that we're comfortable with.
Yep. Absolutely.
Yeah.
Yep.
Very good. All right, brothers. Talk with you soon.
Have a great week. Yeah. Cheers.
Cheers.
Thank you for listening. Bye-bye.